The impact of sanctions is just, again, as I said, is musical chairs. So the final impact basically is limited. And all those calls for those who predicted 2 to 3 million barrels decline in Russian exports did not happen. And the price cap has no impact. In fact, the impact could be the other way.
The G7 countries obviously implemented a price cap on Russian oil with $60 a barrel as a benchmark for this price cap, at least for now. On Monday, we've had data from the company Tanker Trackers stating that Russian flows, Russian seaborne flows, that is down 50% so far this week. What's your impression of the flows? Is it a fair reflection that we've actually seen a drop in seaborne Russian oil, or is it a fake news?
Not really. I'm not doubting the numbers, but I'm doubting the explanations that people are saying out there. Let me start with the following first, because this is important. When we look at, by the way, we talked about this in the Substack newsletter that we published on Saturday, where we predicted that if OPEC is not that OPEC is not going to do anything, and that's going to lower prices, and we've seen that happening. But we discussed the price cap in details in that newsletter in the Substack, and one of the big issues that people do not realize is that the impact of sanctions is just, again, as I said, is musical chairs. So the final impact basically is limited, and all those calls for those who predicted 2 to 3 million barrels decline in Russian exports did not happen. And the price cap has no impact. In fact, the impact could be the other way. And it sounds really funny in this case, when the way I'm going to mention it right now. Think about it this way. I own a company, I have fleet of tankers, and I'm going to carry the Russian crude. The price cap is 60, but I'm getting the Russian crude at $49, which is below 60, okay? I have no problem, basically, sending all the paperwork to my insurance company in London and tell them, look, I am in compliance, I have no problem. I already got it at 49, okay? And here's the paperwork. I have the certificate of origin, and I have the bank statement to show how much I paid for it and what the price I paid for it, because that's really reality. And then he sent it to the insurance in London, and the insurance company said, okay, here are the instructions of the G7 and the EU, and this guy fulfilled everything, so I'm going to insure him anyway. And all of a sudden, everyone is legal, everyone, simply because the price is lower than the price cap. So that encourages exports, and that encourages movement of tankers. But if you look at it from a different point of view, and this is kind of where the fun starts, we always, if we, when we, the most interesting thing about economics in general and the oil market in particular is when you look at the unintended consequences. I mean, energy market in general, when you look at the unintended consequences are just amazing. For example, just to mention something like, okay, you want to electrify everything, and you want everything to be electric, including transportation, and then the weather is extremely hot now in the afternoon in or in the evening in California, and you don't have enough power supplies. What they do, they call on people, please do not charge your electric vehicle. Well, you've been encouraging this for 10 years. So this is the unintended consequences that we talk about. So what happened here is, we know that Erdogan and Putin are friends. And the rules basically is everything coming out of the Russian ports literally has to have insurance and proof. So the Turkish government said, okay, well, let's apply this to everything then. I need to see the proof of insurance. And Kazakh oil comes out of Russian ports. And all of a sudden, when they want to go through the Turkish straits, they ask for insurance verification, and they were able to get the Russian verification on the spot, which means that the Russian government is providing insurance, and the Turkish government basically is recognizing that. So they let the Russian ships go through. Who got stuck? Got stuck the ships that are carrying the Kazakh oil, because their insurance comes from the West. That's why we ended up, literally, they ended up stranded. It's not the Russian crude that got stranded, it's the Kazakh oil. And the decline in the ports basically is coming mostly from the Kazakh oil, because you already have 14 ships or whatever the number is got stranded. Why you have to build more ships to get stranded in the sea and pay for the daily rate of the ships? So it makes perfect sense. So the interpretation of the data basically becomes important. We will know more in the next 2 days in this case. But the issue here is this is not a big deal, and it has very little influence on the market. It's not a decline in Russian exports, and it is not affecting the Russian production or exports at all.
So, Dr. Al-Haji, let's assume that the European Union and the G7 countries consider this a victory, since the Russians will sell and export their oil at a substantial discount to global benchmark as a consequence of this. What happens if the G7 countries and the European Union in particular decide to lower the price cap even?
There are two issues. The European government and the US government basically are going to make a victory out of anything. So the decline in prices, basically, they are going to make it a victory. They are going to make it appear that the price cap is working. Look, price controls never worked. Okay, and those who are intended to benefit from it, they never benefit from it. And those who are intended to be hurt by it, they don't get hurt by it. But the Russians have a counter argument. And the counter argument is very interesting, because they said, okay, now you want me to pay or receive between $50 and $60. And if you look at my 2021 average, it was within that range anyway. And I survived very well, and my economy was doing very well and everything. So you are not hurting me because I'm getting the same price I got last year. So that's the counter argument. And the idea, of course, and this is what's funny here. The Russian government, clearly, they played it right when it comes to the international law, when it comes to the trade part of the international law. So if you look at everything they've done, it is very clear that they have some smart lawyers working it out. For example, when they decided to stop gas imports to certain countries, they waited until the end of the contract. They did not do it a minute or a day before the end of the contract. The moment the contract ended, they handed them another contract and said, here, pay in ruble. And said, the other side said, well, we are not going to pay in ruble. So, okay, bye. And they cut it. So they did not violate the contract. They really respected the contracts. And the others who have long-term contracts, what they did is they played a different game. They said, oh, all of a sudden I have technical issues. Well, if you go to the clause of the contracts, basically there are some force majeure things on technical issues. Or, oh, you did not submit the right paperwork on time. Now you need to adjust the paperwork, and that goes 3 days without gas. So they are playing the game within the legal system available in this case. So what the Russians said that any country that will use the price cap or adopt the price cap, we will cut them off. Right? Everyone heard that. But let's go back to the statement. They said any country. They did not say company. So companies right now can literally say, oh, by the way, I'm buying this oil at $49. I'm going to submit all my paperwork to London or Paris, or wherever those insurance companies are, and I'm fine. And the Russians say, okay, because they never said we are going to punish companies. They say we are going to punish countries. Countries do not buy the oil. It's the company that buy the oil. So everyone is trying to game the system. Even if you look at the payments in ruble and how they gamed it and how they played it, it's just been a game all along since day one. And if you look at the sanctions themselves, I'm going to mention some examples here to the audience because it is very important to understand. We are into the 8th round of sanctions. I mean, this is just a joke when you are talking about the G7. What G stands for? I mean, this is the Great Seven. This is used to be Great Britain. Now it's the Great Seven. Okay, and they are not able even to manage a small war like this, and they are into the 8th round of sanctions. Well, why?
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.